welcome to today's webinar. Where do I actually start? So this is the third webinar for our Accountants Forum. Clayton Wood from Seamlss, and I'm joined again by Agnieszka from Lyra Risk Compliance.
Lyra.
Lyra. Sorry, I say that every time.
You're stuck in the old Italian and Turkish denomination days, Clayton. I don't know why.
Look, she's been around for 20 years in the financial services industry, including as general manager in major Australian banks, financial crime risk remediation programs. She's worked across several large banks, you know, from UK, Europe, US, Asia, and Australia. So, you know, she's been around and done a lot, and she's done a lot of webinars with us. So she knows a lot about the regulations and the process, and she cares about making sure that you're getting your risk and AML compliance on track. So, you know, all the recordings from the previous ones are on YouTube. So we'll send that out in the next email, I think. Ags, that'd be good. Like, I think that's a good key aspect. We're tackling where do we actually start. So if you've got some questions, by all means, drop them in the chat and we'll get to them. I've already got 10 questions before this session. So we've got some awesome questions coming up. Is that true, Ags? You happy with that?
Absolutely. Hi, everyone.
Next slide. Come on, computer. So there is 140 days until it goes live. 1st of July, that's the hard deadline. There's no grace period. It's not a soft launch. 75% of firms haven't even started. We're hearing from a lot of firms that most haven't done anything. Like, at least some people in the chat have noted that they've downloaded it. Hopefully they've looked at it. It's not because nobody cares. It's the information wasn't there. And now it is. Now it's out. And now it's very overwhelming. There's a lot. Note that a lot of the people on today's webinar, I think it's almost 70-80% haven't started. Some people are researching, and then some people are obviously using Seamlss and leaning on us to help. Ags, what do you get from what you're seeing with most firms right now? Are they paralyzed, or are they starting to move and do stuff?
I think it depends on the size, and I think it depends on potentially the exposure. So certainly the big guys, the big players are all moving forwards. They've either hired the big consultancies, they've hired people, they've hired teams. So the top end of the spectrum, as we know, the corporates will understand that to get this level of change in will require significant work on their side to make sure that it's properly implemented. So those programs in the large scale have started. I think the medium is a bit of a mix. I think some have bought tech, some haven't bought tech, some are in the process of buying tech, but I don't think many in the medium size have actually done much implementation yet. They're waiting. And I think the medium to small have done not much overall.
And the tech doesn't replace it, does it?
Yeah, no, the tech doesn't replace it. I mean, the entire, if you've joined some of our prior sessions, I've called it the AML pipeline, right? And the AML pipeline has a little valve.
Have you read anything about
is a designated service and
new AML that they're rolling?
Sorry, Emily, I don't know whether you meant to be talking to us. Thank you. What was that? I lost my train of thought. Yes, so you've got the AML pipeline, and the AML pipeline is a designated service, and that pipeline needs to be switched on through the designated service. So I'd say that most haven't started moving because there is quite a bit to do, and that's understandable, but it's time to start moving.
Yeah, and I think that's the key, is that AUSTRAC just gave us 30 different documents. You know, on the 29th of January, they finally dropped it. A couple of months late, and they left it right to the end of January to do it. It was in January when they said the second time. It's basically a complete set of documents for accounting firms to build their AML program. But, you know, it's a problem. It's 30 documents, policies, processes, risk assessments, onboarding, CDD, personal forms, maintenance forms. And if you did download them, it probably did feel like 56,000 pages.
Yeah.
Were you expecting this from AUSTRAC? Like, is this comprehensive? Is this gone further than you thought? What are other sectors getting
Yeah. So can I just say, right, I've worked over multiple regimes, AML regimes globally. I've worked in 7 banks. I've worked in the financial services sector. I've never seen anything that's come to this level of detail. And actually, I was quite taken aback at the practical nature of what they've done and the comprehensiveness. Like, I just thought actually we were getting a risk assessment, a program, and a policy, and some other document that might help us with bits and pieces. But actually, they've given you, or us, as you say, gift, right, an entire set of documents that can be utilized. Now, it's not to say that every document needs to be utilized by everyone, but you will need to understand how to use them. So my overall assessment is excellent. The government didn't write it. They did hire people that I do know who have written it. So people from the industry have written it. I find it practical. I personally, coming from the banking sector, which is HSB, OE, how simple becomes over-engineered, I find it not that. I find it pragmatic. I find it quite simple. But I'm reading it with eyes that have had, 20 years, exposure. So I totally get that it may be, it's not rocket science to me, but it might be rocket science to somebody else. But I think, rest assured, this is a really good pragmatic start. It's not everything, but I'm actually, to be perfectly honest, a little flabbergasted at how pragmatic it is.
Well, that's excellent. And I think, like, it is a gift. AUSTRAC done the heavy lifting, but it's not a blank page and you're just going to fill in the blanks. Like, the idea with this is, like, for certain size firms, how does this compare? No, I've already said that one. Sorry. Like, I guess, like, this is ideally, I think it was for small to 15 seat firms. Is that right, Ags?
So it's, I think, 10 and under.
10 and under.
But right, if you were to utilize them and amend them and tailor them appropriately, you can absolutely use them. I don't know if the program document, I think it's around 39 pages or something like that on the actual policy document, that may not hit the mark. If you're 50 plus people, you will need to do significant uplift on that.
Yep.
But I think anywhere up to, I'm making this up, 20, 25 people, depending on how your risk assessment lies, you're not going to get penalized for using this document. However, suffice to say, you will need to understand more, and you'll need to make sure that you comprehensively tailor that document the larger you are.
And I think that's the key, is, like, yes, you could copy, paste and use the document, but you can't just rely that, I download the documents, job's done. Like, the size of the firm, the people that you are surrounded with will dictate the outcomes that you can provide and the processes that are followed. Like, just downloading it and saying, here it is, people, off we go. It's going to come back to that training aspect. The good news, look, you're probably already collecting half of this stuff with Seamlss. I'd say more than half. It's around 70, 80, 90% of the data. If you're using Seamlss, names, addresses, ABNs, ID verification, entity details, just all the standard onboarding stuff. And a lot of that's in Seamlss, and it's also listed in some of these documents. But the AML layers around beneficial owner, PEP sanctions, risk ratings, that's on top of what we're already doing now. And that stuff will start adding in. So we'll add that compliance layer to Seamlss shortly. For a firm that's already doing structured onboarding, what are the main gaps they need to fill? Is that about it? Just those extra checks when required?
Yeah, I think screening, putting it all together. I think the things that I've mentioned before, right? Yeah. So the information, you might be capturing what 80% of the info, 75% of the info, but it's what you do with it. It's how you look at it, and it's what you how you understand that data, that information, to make the right risk decisions later. Because as I've said before, this process, this AML CTF framework, is really around applying a different lens to how you view your customers and whether you want to do business with them. So there's going to be different process steps, but there will be some difference in how you think about things, as well as how you do things operationally in your organization.
Yeah, excellent. And the startup kit. So the startup kit's got 4 layers. There's the core documents, the personnel forms, the client forms, which is the ID, the onboarding and stuff that we're doing, the maintenance forms to keep it going after life. So I guess, if you think about those core 4 forms, like, can you walk us through why the core documents need to come first? Like what happens if a firm just jumps straight into the client forms without doing any policy or risk assessments, getting their firm ready? I guess that's the part, yeah.
So the thing that you need to understand is you need to look at it top down first before you can go bottom up. If you start looking at individual forms, they've given you personnel forms, or what I would call employee due diligence forms. They've given you onboarding forms for customers and process. You kind of need to understand the top down before you go to bottom up, because then you're going to miss. You're just going to look things in a very siloed manner, which, by the way, half the industries have been doing for a long time, and they're just beginning to get it all together now, stitch it all together now. But your process document, sorry, your policy document, or you call the AML CTF program, and your risk assessment, they're the kind of two core foundational frameworks, really, that will impact what you do and how you think, right? So you do need to look at them top down. The risk assessment, because the risk assessment tells you what is considered risky from an AML and terrorist financing or weapons of mass proliferation aspect. And the program is the policy. It's the thing that will explain to yourselves, your teams, and the regulators what it is that you're doing. So the two sit together. The process document actually is quite really good as well, because it stitches it together and it tells you what you need to do, and there are some checklists in there. So they've effectively given you like a whole, almost like a customer journey. They just haven't given you pictures. So all of those together I need to weave in before you start looking at the detail. And we've kind of gone, and I've kind of started talking about our next few.
That's okay. So,
documents.
as you can see, if you go just read the table of contents for something like the policy document, that's where Ags was just talking about personnel roles, the due diligence, reporting, record keeping. What is that process? Can you walk us through, Ags, a little bit about what firms, do with it? What's the main sections that they may need to customize? Any key points that you think need to hit home?
Look, I think all components of these documents are relevant to all firms, because they all explain different parts of the program, from your employee due diligence or personnel due diligence through to your customer due diligence, through to your risk assessments, which they talk about later, what you do with customers that you've already onboarded. So the important thing to note is that pre-commencement means pre-commencement to the policy. So the 1 July is your commencement date. So you will apply the AML pipeline, the valve, to all new customers or all customers requiring new services post 1 July. Everyone that you've already got before that, that's fine. They stay as they are until they're triggered to be, they ask for a new product or some information changes for them, which then make them, liable to go through the AML pipeline. So all the sections in this document are important, and they describe different components of your overall program.
Excellent. And I guess that's, just going through those sections and making sure they apply practically to you, especially around things like it's mentioned there, personal training and due diligence and things like that, to make sure that you've got the right people in the right places, that you have a policy on the process of what you're going to do, which is why you've got a process document.
Well, a policy document is the beginning of your procedure. So you go policy, which is how does the law translate into your policy for the documents? I mean, you guys are very process orientated, so you totally get what I'm saying. Not everyone is, right? So then you've got the policy. You need to translate that into a procedure, which is like a mixture of process steps and procedures for the larger guys. And then that translates into what you actually do, the actual steps that you take. So it all is kind of hierarchical in terms of how the information flows down into your underlying organization. I hope that makes sense.
Yeah. So the policy is the what and why, and the process is the how document.
The how, exactly.
Yeah.
The how and the what, and the detailed level what. Yeah.
And this is the bit where the team would follow along, so to speak. Is that right?
Sorry, when you say team follow along, what do you mean? Sorry.
Your team members would follow the process document.
Absolutely. but they will already know this because they would have done the right training, the AML CTF training, which will describe all the components of the program and the high-level process steps, the what and the how and the why.
Yep. And then now onto the risk assessment. I'm guessing like this is the core document that everyone's going to be spending the longest on, probably the most important. This is what all the training is around. This is what we've been talking about, risk and risk assessment and understanding the risks. And this is the bit where, I guess for me, risk, I talk to lots of firms and most people I feel would be 99% low risk clients. Like in my firm, I have very few clients, if any, that are overseas, let alone in high risk areas. They're not going to be many PEPs or anything like that. So I think my risk assessment generally over the firm, because I'm a smaller firm, is quite low. But as the firms get bigger, your risk and risk ratings may get higher and more complicated. I guess, how should firms approach this? And is this something just a sole practitioner should rely on something like this? Or like, how do you see this moving forward?
Well, just to amend one thing that you've said, like both the risk assessment and the AML CTF program, which is the policy, are equally important, because the risk assessment really is one part of the overall thing, which is the AML framework, but the policy document describes it all. So that is, they both really need to coexist equally in the side by side. So sorry, just so everyone's very clear, they're all, those two documents are your core documents for your entire program. And when I say program, so the regulators use the word program really a bit like a framework. So they say, what consists your AML CTF program? Well, it's your policies, it's your risk assessment, it's your procedures, it's your processes, how you actually execute on those things. So when I use the word program, I use it in that regulator language, which includes your policies and your risk assessment and your procedures and your technologies to support the processes. So on the risk assessment is where you've got to, this is where you're very, it's all very new here, because you're applying that different lens and you're looking at things that AUSTRAC has designed around customers and around who they are, where they're based, where they come from, what kind of things that they do, how do they operate, and all those things have a slightly different rating, whether it's high, medium, or low. So the way that AUSTRAC has designed the risk assessment, I actually thought it was a bit different than what I thought. I thought they were going to give us an Excel spreadsheet, but they haven't. They've given us a methodology, and that methodology, you ask certain parameters are deemed have different kind of exposures, and those exposures can be deemed high, medium, low, and then those high, medium, lows are all then summed up, and then you get a high, medium, or low per customer, which is slightly different than what I thought they were going to do, but I understand what they've done it. So is this
to simplify for smaller firms? Is that the idea? Is like small firms don't, you know, you got to kind of classify your clients and go through the risk assessment process, and that high, medium, low is just keep it simple? Is that why, or is that the way they're going with all of this sort of stuff?
Well, all the current tranche one actually have to have a risk model in place.
Yep.
So a risk model is actually an Excel spreadsheet or some sort of system, right? Yep. That does things at a very granular level, that has different parameters, usually 5 or 6 different parameters. They've kind of kept it simple here. And those then get a score, and the scores get totaled up, and then those totals will give you a number, and that number is assigned to a scale, and that scale will then have, you know, will have differentiators between high, medium, low.
Way more complicated.
So much more complex. That's right. So in the reforms currently the tranche one guys don't have to do it. The banks all do it, because I've actually helped design quite a few of them. The banks do it because they've had to do it for a long time, but some of the other financial services have not. They will now need to have a proper risk assessment. This methodology is a nice way, I think, of keeping things simple. I think if you are larger and if you do have quite a lot of clients, I think the top end of scale will end up going
that way,
to a slightly more nuanced or complex risk assessment, which will be probably some sort of model.
And I think that's a good point. Like, this is designed for those small firms. The bigger the firm, you might need to assess that risk different. This starter kit is designed for small firms, so therefore they've kept it simple, kept it easy. That doesn't mean it's going to be a replacement for a large firm, and I think that'll be an interesting question to ask later on when we get more information. But for now, I think this is the part. The risk assessment drives more requirements, like higher risk equals more checks. Like, is that fair to say?
Yeah, that's right. So they talk about, in this document, they talk about inherent risk, and inherent risk is something that innately some clients or some jurisdictions pose innately higher money laundering risk. For instance, some countries in Southeast Asia, which have more lax regulatory regimes, will inherently have higher risk than some others. And some client types, for instance, entities versus individuals, where there might be a greater risk of different beneficial ownership, layers of ownership, which then create opacity. And those things are viewed as inherent risk because those type of structures will be able to conceal information a lot more, and hence they have a higher type of risk. So the whole point of doing this high, medium, low is understanding that anything that hits a high risk will require additional due diligence. And that additional due diligence is where you ask questions around, well, where does the money come from? Where is the money going to? Like, and not even which money, you kind of need to understand there is a term that you might hear, source of funds and source of wealth, which is a key component of what I would call KYC in old parlance, which is really understanding is where the funds of your client come from, but also where their wealth comes from, which you may need to ask in certain sections, not all. So there's a greater level of work that you're going to need to be doing for a high-risk customer. It's not to say a high-risk customer is a bad customer. In banking speak, high-risk customers can be very lucrative, right? But the question is obviously, well, not always obviously, but the question is understanding that risk so you can make informed decisions whether you do want to continue with that client or not. And
yeah, so this is going to cover designated service, like different services will have different risks. The clients might have risks. The delivery channel might have a different risk, or the country risk. Like, there's a bunch of different indicators when you're onboarding or dealing with even a current client that might trigger a designated service that will dictate your risk assessment and compiling all those factors in. Like, don't get me wrong, if you're dealing with old mate tradie that's working down the street, your risk is probably pretty low most of the time. But if they are international or dealing internationally, then your risk may change. And I think that's why you need to dive into the risk starter kit.
Yeah, and actually, you know what? I'm actually thinking our next session we could do risk assessment. We could focus on risk assessments, which is what we were going to do anyway. Now that we've got it right, and we can do a real deep dive on it, which is fine.
And I've got that here on our game plan. So we've got 5 more months left. We talked about 140 days left. So February, this is the time that I'd recommend everyone go out there and appoint your AML compliance officer. Yep, right in it right now. Download, customize that guide, appoint the compliance officer. Who's that going to be? Start mapping out which of the 9 designated services you actually provide. So there are a few where you probably don't matter too much, but there are several designated services that pretty much everyone provides as accountants and some bookkeepers. We've gone over that in previous topics. I think I had an interesting discussion with the accountant yesterday, Ags, around appointing the AML compliance officer. So in small firms, there was one of the questions that will come up later as well, but a firm like mine, you know, there's a team of 8. I'm the owner, managing partner, whatever you want to call it. And I have an amazing team of admin. Celeste is the practice manager as well. Like, like my team are the ones that are going to be doing the onboarding. They're going to be doing the ones checking. So I need to train them to do this. But am I still the AML compliance officer? Who do you think would that be most of the time?
So it really depends, right? So just to be really clear, the AML compliance officer is the person who's senior enough to be accountable back to the regulator. So it cannot be someone junior, right? You can absolve some of the actual work and some of the actual review. So the way that I would normally advise companies how to do it is, if you have an AML compliance officer role, certain activities of that can be shared with someone more junior, but the accountability, the checking, the actual checking point before it goes out from out of the boundary of your organization into the regulator needs to be someone more senior with enough clout in the organization to speak for the risk, to speak to the regulators, and also effectively wear that AML hat in your company. So it needs to be either somebody who is the head of the company, the compliance officer for the company, or the operations manager for your company.
So for most small firms, it's going to be one of the partners, owners, and managers.
I think so.
Cool.
Certainly you can be supported on a lot of the activities through somebody else, but you need to understand what's happening and where and by whom, because the buck will stop with you, essentially.
100%. I'm the one that's going to cop the fine if it all goes to shit. I guess the other last thing, mapping the designated services. We've talked about that. I'm going to skip over that because we can come back to that later if someone really wants to stick around for it. Next March, it's understanding risk assessments. So I love it. Next webinar, we'll go through some risk assessments and some scenario planning, perhaps. Complete your risk assessment. So download that guide, start customizing it, customize the policy document. Enrollments are open in March 31st. So there's now is the time to get ready for March and just keep chipping through it. Is that fair to say, Ags? Like we've got a fair bit. We still have a fair bit of time, but it'll quickly jump upon us, especially for the bigger firms that have more people to train, more things to influence.
Yeah. And I would say, start your awareness. Get the right language in place to start comms and awareness. Understand what your plan is. Do some planning. So that you understand what is going to be happening before the 1st of July, because as we all know, we're already halfway through Feb already, right? The last time I checked, it was 21st of Jan, and now I'm on the 11th of Feb. So things, life and work and everything and the world will continue on quite quickly, which is why it's important to set some milestones so you understand what's happening where. Just one thing on your complete risk assessment, you won't be completing risk assessments. You're going to be setting up your risk assessment tools so that you understand how to apply it once you do a bit of once you have everything in play for the 1st of July. The testing end-to-end in June is absolutely key, so you understand what's happening where, so you're not caught out on the 1st of July. Saying that, the regulators will not be knocking on the 1st of July. They will be knocking once you've submitted your first AML annual compliance report, which will be in the first quarter of next year.
And I think that's, one of the things is what's the minimum viable effort to get compliant? I think that's downloading these documents and getting started and working through them. I don't think you can just download them, drop them on your folder and think, oh, life's good, I'm all done. If you get a knock on the door and you haven't done something right, it's an expensive fine. So you really kind of want to get it right, I feel.
Yeah, and look, and they've gone all out to give us, I like it, to give us an MVP, right? What they're giving you is an MVP. You cannot go below, you can only go up, right? And I think that's how I view a lot of document, and I've worked on some global programs, and that's exactly what we've always said. Here's your baseline starter point countries. When we had, I was at 80 countries at one point. Here's your starting block. You can go up. You can't go down, right? And I think that's the way to view these documents. Yeah. And
as the slide says, you don't have to do it all alone. Seamlss we have a lot of forms. We handle a lot of that stuff. We're going to implement more AML. Lyra can help customize the programs and get your audit ready. Like, this is important. You can do this yourself if you're a smaller firm, but I feel like the bigger you get, the more help you might need. It's just literally a starting point. AUSTRAC's designed it for small firms. We're not here to create fear and sell you this massive $20,000 beast. There is a lot of that happening. So where to go? You can go to AUSTRAC, get the starter kit, download it there. There's a whole bunch of documents some people already have. You can obviously use Seamlss, and you can also reach out to Ags from Lyra. And Ags, what is your offer at the minute?
Yeah, so look, it is getting, thank you, sorry. It is getting quite busy. So what we've decided to do is, I think I've just been thinking around what would help me if I was in your shoes. And I've always like a 1 day short, sharp immersion, right? So I've just thought, why don't we do, because I have been doing some end-to-end implementation, but I think they end up being more expensive, time consuming for everyone. So I thought if we do something like an immersion day on AML, go through the starter kits, look at your designated services, just do a mini engagement in 1 day, say 8 to 8.5 hours. It can be either virtual or it can be face-to-face, ideally face-to-face. I'm Melbourne based, but I can travel. We just need to schedule it in. So we've designed a bit of a kind of a boxed in, like 1 day stop solution where we look at everything that you could see on the page here. We review the kits, we review designated services, we agree which of the forms and which designated services you have, therefore which forms are relevant. We look at your roles and your responsibilities, look at your kind of operating model, how we make it fit. If we have time, we could talk technology as well. If you're not a Seamlss customer, we absolutely see. Like, there's one thing I would say is tech is not the solution end to end, but it supports you from the workflow, from a comprehensiveness, from record keeping, which record keeping is an obligation under the AML Act, by the way. And I've been around in banks where we've had to scrabble in 3 different systems and paper copies, that was in the old days in private banking, to extract it to give to regulators. Like, you don't want to be there. So that's where the tools help you. We also look at your gaps, you'll get a next steps and a plan. So I thought, so we've got that sitting at the moment at 3,500 plus GST, and you kind of do full immersion where you come out knowing what you need to do. We'll do some high level practical guidance on the risk assessments, on the policy, and on CDD, customer due diligence. This won't be AML CTF training. The AML CTF training will sit in modules and it will be on demand online. There are different providers, some better than others. Lyra will have our own. And the one thing I would say is we try to make it as interesting as possible. So it's not death by, 1,000 different bullet points. We will have some video learning, which that's how I learn, is through videos and through pictures. So we'll have that separately to this, but that's the kind of offer which I think end to end. It's a deep dive.
Deep dive right in, come in, get your stuff sorted for those firms that it's just overwhelming. It's a lot for some people, and I totally understand that. And this is why we put the offer up there, so that if you're aware, you're like, I don't have time to do all this. I want someone to come in here and effectively hold my hand.
And it's a clear and structured day, and there will be some pre-work, right? And there will be some post-work as well, just so we get that day, and costs, so you get the most out of it.
Go on to the questions. So there's a few questions in the chat. I'll come to them as well. So the pre-webinar questions, I appreciate all the people for filling them out. Do I need to ID check existing clients before July 1? This comes up all the time. No, you don't. They're pre-commencement customers. You can keep servicing them without doing the ID checks. I guess, Ags, what would trigger another CDD, or what would trigger something to happen?
So you provide them with a new product or service that you're not already offering. So you've got one client, they're static, they ask for something else, one of the designated services, which is either setting up a different structure for them, also their information around them changing, their name changes, their registered address changes, anything around what you currently do on that particular client changes, and that change is a designated service, then they fit the AML pipeline.
Names and address changes in regards to an ASIC change. If someone just moves houses, that's not a reason to do an ID check.
No.
So just be aware, we're talking about ASIC and as a designated service. So the next question was, does AML apply to every client or only the ones I provide services to? And I think that's that same bit. Only designated services. When you trigger a designated service, so the company office holder, you're sorting out their ASIC and they move offices or address, you just need to do another check, get that completed. I guess the key for you, Ags, is where does that sit between advisory and transactional?
The what, sorry?
Like, so the question was around, like if you're just doing advisory or just doing transactional accounting, I think the type of accounting or advice you're giving out is irrelevant. It just comes back to those designated services.
Absolutely.
So Do bookkeepers need to register? Depends on the data entry in the BAS. So most, it's probably not. But I think like controlling clients' money, managing their accounts in connection to dealing with them could be a yes. There is an AUSTRAC tool. You can jump on there. I'm not sure if there's any examples of bookkeepers that wouldn't be caught, Ags. I guess you're not, like, I guess my key question with a bookkeeper is this isn't just according to, I'm an accountant, so therefore I'm under tranche 2. It's what services I provide is what matters. Is that?
Yeah, I mean, so there is 9 designated services, right? We put them onto an Excel spreadsheet, right? And map them against each of your services and just check, is that service relevant? If there's an X in the column, you need to put AML, you need to take that customer through your AML pipe. Yeah.
And I think this is similar to question 5. They've asked, I'm in a niche industry, it's a low risk industry. Does AML account for that? Like, yes. AML is risk based. Low risk means simpler, but you still need to do the documentation. You still need to assess the risk. Ags, inherent risk, residual risk, like, thoughts?
Yeah. So as we've said in the past as well, so if you haven't listened to any of our earlier webinars, have a listen. But I talk about it as a net, right? The net, the AML net, or the anti-money laundering net, counter-terrorist financing net in Australia as a whole. Like, we're not legislated. So it's got nothing to do with what industry you are. It's around what you provide to your clients and what your clients come to you for. That is the element, the whole point of the legislation. And then what risk does that client present? So it's completely agnostic of where you sit in terms of an industry sector. But it really is who's your client and what you do for them.
What designated services? So, register with AUSTRAC on the 31st of March. Someone's asked when. The deadline is by the 29th of July. You need an ABN, the business structure, the ownership details, and your designated service list. You'll implement them. When you're enrolling, Ags, would you just list all 9 services just in case you ever actually do one? Like, would you have to go and update that if you only put 4 and then we're like, oh, I actually did another one? Like, does that happen in the past?
I think if you are offering it, put it down. And if you're not offering it, don't put it down. You can always update it through your annual compliance report. So you say, we enrolled and these were our original designated services. We provided 5 out of the 9. Actually, throughout the year, our product team, I'm talking banking. We've decided to offer, service of XYZ. We've updated our risk assessment now includes our updated services. It's a communication, right? So you can't foretell the future. Like, we don't have crystal balls. You need to be clear around the current status. You need to be open and transparent, and then you communicate on that same basis moving forwards. Cool.
Question 7, setting up a new company. Do we have to ID check all the shareholders? So generally it'll be a yes. It's a designated service, so you need to do your CDD checks. Who is the beneficial owners? So beneficial owners, 25% or more of control of the entity. The starter kit has forms and entity types and stuff already built in, from government entities to businesses to trusts and things like that. So give us a brief walkthrough on what beneficial ownership looks like, Ags?
So look, beneficial ownership is exactly as you said. It needs to be 25% of ownership of the entity. What
if they've got control but not 25%? Would that still be a reason to do a check?
Say that again. Sorry.
If they had control but not ownership.
Control is the operative word here, not ownership. It's the control of the entity, because this is all around understanding people who control entities have greater ability to utilize that entity as a vehicle for money laundering. So it's around the percentage ownership, not what you call it. Whether it's control or ownership, I mean, it doesn't really it's the level that counts.
Cool. So what if we're not your typical low complexity small business? Like, if you're a bit more complex and you have international clients and really complex structures, you need to add lots to this the kit. That's where Lyra can come in. What does that look like beyond this kit? Like, I think we've talked about that enough in this session to know that there's a lot more that can be done. Yeah.
Yeah, so the beneficial ownership is the beneficial ownership. You'll still have to do X amount of work on each of the individual Benny owners. Where you have different layers, what it means is that you'll have a greater amount of individuals. At the end of the day, you've got to go down to the individual level to do the work on, which is why technology helps. And there are some companies like LexisNexis and Dun & Bradstreet that if you do have a more complex entity, you can type their names in and they'll give you the beneficial ownership throughout structures. So there is more analysis needed on the more complex types, but you're really always down to the base root. Who is the person that controls that company or that entity?
Cool. Number 9. So what are the ongoing audit requirements? So periodically effective testing, annual reporting, which is not for another whole year, independent evaluations every 3 years, maintenance of forms that covered in this kit. Like, what does that maintenance cycle look like normally, Ags? Like, I know this is all new to us all and it's probably going to evolve over time, but just a brief.
Yeah. So I think it depends on your size as well, right? So in my experience, so firstly, independent reviews or audits can be done anywhere between 1 and 3 years, right? What I would do if someone's writing your program from scratch, if you're not utilizing what you've got in, you may want to do an independent review within the first year, just to make sure that somebody else, you've got a fresh set of eyes that looks over your entire AML framework to make sure that nothing is missing, that you're not doing anything incorrectly. So I would say that in the first, 2 years of operation, you'd want to do an independent review within the first 12 months, and then you might leave it for another couple of years. If you had an issue or a concern, you might do it more often. But I would do a check in the first year on an independent review. Yeah.
Cool. Someone asked if Seamlss will have AML compliance. Yes, we're going to build it into the software to assist firms for sure. I'll go through the questions. Marcus has asked, the kit may not apply when we do online transactions, so we can't use the kit. I'm not sure what you're asking there. Your next question was, does this cover every client or only clients when we provide those services? Only clients when we provide those services. Those designated services are what are going to trigger it. Pretty sure I answered Alison's just before. New clients only. So when you're doing a new client, you're going to do your ID checks and some of these checks as you do even an individual tax return. I do think this will impact the cost of doing individual tax returns. They will pay for onboarding more so because we have to do additional checks. Right now, you should be doing DVS checks on your clients anyway, so I think that's just going to become a part and parcel standard. Sole practitioners, personal due diligence training are irrelevant. Do I still need to complete these just for myself? Yes, Alison, you are I assume you're a tax agent providing designated services. You are going to need an AML process. So everything we've talked about today, you're going to have some form of it, which is why AUSTRAC's giving you this ready to go template so you can go off and implement it. I realize that you're going to be so close to those customers, you're probably going to know that risk and it's going to be a lot easier for you. But yes, everybody needs to do it. Next question, what is the fee? We did the fees. Subscription fees for Seamlss is $60 a month or $600 for a year. I've got a whole webinar on that next week. If you want to join me on the demo for Seamlss next week, by all means. I'll put that in the email, post this webinar too. What is your acquiring an accounting firm post July 1? Do you need to check all those clients? That's interesting. So if you acquired an accounting firm post July 1, would you need to do KYC on them all?
Only where they're providing a designated service.
So once it does it, triggers it.
Yeah, I mean, if I was buying a company and I was inheriting 150 clients, I would go back and check to understand which of those clients are getting which designated service and then what information am I holding. Because it doesn't matter. AUSTRAC won't care when you purchased it or how you purchased it. At that point in time, they're your customers. You will need to do a check to make sure you understand. You may place reliance on everything that was done beforehand. That's absolutely fine, but you will need to understand what you have for each of those clients that you are providing a designated service for.
And I feel like if you're onboarding a new firm and a bunch of new clients, you've either got to look at their due diligence and the ID checks and things that they've done over the past few years, and as to whether you go, am I going to blindly accept them, or am I going to ID check them every time I interact with them each time? Because, you know, add a new engagement letter, do an ID check. It's not a big cost or a big time-consuming aspect of buying that firm, but having the reassurance of going, I'm all good, is probably a hell of a lot better in my mind.
Sorry, just to add, it should probably come, if moving forwards, that should be one of your criteria, your due diligence criteria, if you are purchasing a company or merging with a company, to understand what their compliance practices have been or what they've been doing. Because that you really should start thinking and looking at your overall business. AML is now one component of your business.
And there's a risk
of your operating model, of your governance and your operating model. So you should be checking on that. There should be a box that says, I understand what they've been doing, or I don't, right?
Comfortable. Would the include changes to structure or shares? Yes, that's listed there to number 2 under the designated services. So yes, that will trigger an AML request. You will need to do some more checks because that's a designated services. This one comes up a lot. I'm an ASIC agent. If a client's registered office changes, do we have to do a new ID check? So if the office changes, it's not just, do I need to do an ID check? I've got a designated service. I now need to do a risk assessment. It's not just if this, then that. It's a risk-based approach. And I feel like that's what we'll talk into more in the next webinar. Will AUSTRAC offer up a flowchart for ID checking trust beneficiaries, when to do it, how far down the family group rabbit hole? I don't see them. That's, you're asking for a if this, then that scenario. As we've discussed today, it's a policy and risk-based approach. Your policies will dictate how far and who you will check, and getting that team to check. Is that fair to say, Ags? Are you happy with that?
Yeah, that's right. I mean, look, you will need to, I mean, the fact that they've given us a process document is you know, it's unreal, really, you know, from like unbelievable, because regulators normally do not tell you how to process something. They'll just tell you what you need to do. So I think any kind of flow diagrams, I mean, we can obviously help you with that, but you'll need to sketch that out yourself. But the process document is very good. They've even called it client lifecycle, you know, so it's there. But yeah, you will need to structure that yourself in terms of ID&B, flow.
Yeah.
Sorry.
And someone's asked about how we find an AML auditor for a sole practitioner. Like, we're not going to, when do we need an auditor for our stuff? It's 3 years time, yeah. So I'm assuming more will come out of the woodwork at that point. Like there'll be a demand because there'll be thousands of accountants needing someone to check this stuff.
Yeah,
so
yeah.
I don't think you need to stress on that just yet. Is that fair to say?
I would say focus on getting the thing in, and then worry about auditing it. Yeah.
Agreed. What will the AML Compliance Hub look like in Seamlss? How will it help? We will continue to build that out and roll that out in the coming weeks. You will see more changes, and I will be doing demos on that in good time. I was referring to the personnel section. Personnel due diligence and training are irrelevant. Oh, so she's saying, Alison was saying that the personnel due diligence and the training are irrelevant as a sole practitioner. Well, do you need to complete the training sections? Like, if you were the only person, would you still have those things on there? If you're the
only person, you still need to train yourself. Then you are wearing all hats.
Sign it off as a part of your process and policy procedure document. If you're getting audited, I was a sole practitioner, I'm getting audited by AUSTRAC. Would they expect me to show my details, being that I'm the only person?
Your details where, sorry, in the personnel?
In regards to training and due diligence of personnel.
Yeah, you just need to make sure that, that you've done some training and you've got a record of it. And then, look, in terms of holding your own ID&V, probably yes, because you'll need to store something and AUSTRAC will check it. But I think they're not going to be checking. I think the fact that you have qualified to run your own company and be an accountant is probably going to, which is, who is it APRA or asset.
Tax practitioners board, like we're already got to be fit and proper people. Like this,
Yeah,
you're already
that's
ticking a
kind
bunch
of-
of boxes. Like,
Yeah, that's what I mean. Exactly. Yeah.
Seamlss will have a bunch of forms. Yes, Denise will have a bunch of forms for the AML. Yes. Chris just noted that it'll cut the price of shitty firms by 1/3. I tend to agree. If your processes and documentation are not up to scratch, if I was buying that business, I definitely wouldn't pay as much because the risk is a lot higher in taking on those clients. So yeah, having this will obviously increase the value of your firm because you've got the boxes checked. And it is risk reduction for the firm and anyone buying it in the future. Is that fair to say, Ags? Like if something goes wrong, they're big fines, millions of dollars. Is that right?
Okay, so for banks, right, as they should be. The last one was 1.9 billion, which fairly was low as far as I'm concerned in the global banking sector. The biggest one was 9 billion in Paribas. Anyway, you guys aren't going to be fined $1 million, right? However, there are daily fines. There are daily non-report submission fines or daily fines of not having things done properly of around 18,000. So you do that for a week or two or a month, that will be fairly crippling. So it's not millions, but it's enough to, I would say, have a big impact on your bottom line and your earnings. Yeah.
You $18,000 for one day. I could deal with that.
One day, yeah,
Well,
and then that adds, yeah, the longer you have not remediated something, yeah. And also, suffice to say, sorry, just on that point, it's best to get things in properly and spend the time doing it properly, because fixing things later or remediating things later will always cost more, always, as every bank pretty much globally will tell you. So it's good to learn from their mistakes, of which there are significant numbers, so that you do things properly. And I think the kids are definitely there to help us do that.
Excellent. So, start where you are, use what you have, do what you can. That's Arthur Ashe saying. So I just want to finish today off. If anyone's got any more questions, post it in the chat. Today is recorded. I will post a copy of the recording to the people that registered. Appreciate everyone for jumping on. Appreciate all the questions. It's been really great. Really feel a lot more comfortable with the firm and where we have to go in regards to implementing this now. Like I was probably a little bit more stressed than I was 2 months ago, but now it's like, okay, it doesn't have to be overwhelming. I feel like we could just start with those few documents, Ags, and progress forward. So
absolutely. What we don't have here is a link. I think they've got Seamlss. I don't have a link to Lyra. I wasn't able to copy that QR code into the chat. It won't let me do that. So maybe you can just include some, comms if you want to get in touch, have a chat. Yeah, have a quick chat.
You'll all get an email, reach out, get in touch. If you want some help, reach out to Ags. Definitely worthwhile there. Take some stress. I'll take some Wayne, no problem. I'll take some stress leave. Really appreciate everyone jumping on. If you've got any other questions, feel free to email us. We will work on the approach to risk in the next webinar and the risk what was that document called?
Risk assessment.
We'll work on that one in the next webinar. So appreciate everyone tuning in. Keep the questions coming. Happy to chat. Hopefully you're finding the Accountants Forum of value, and we will keep delivering it. Much appreciation. Thank you, everyone. See you next time.
Thank you, Clayton. Thanks, everyone. Take care. Bye.